You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again to dive into the exploding world of cryptocurrencies, talk the volume, the open interest, the SKEW, the volatility, all that good stuff. Yes, it is time for the Crypto Rundown. My name is Mark Longo from theoptionsinsider.com, as well as, of course, upon this fine network, which you're listening to this show right now. If you haven't done so, if you haven't upgraded to the full network, if you just subscribe to this show, and we love to see a new influx of people discovering this show all the time, make sure you head on over and subscribe to the rest of the network over there. You'll get all your good stuff. Option Block, you'll get TWIFO, you'll get the Advisor's Option, Volatility Views, all the good stuff. Options Bootcamp coming back at you every week out there as well. All that good stuff and more coming at you when you upgrade, for free, of course, to the full network. And, of course, however you listen, make sure you send in those questions, those comments. We do love to hear from you guys, and you guys also like to hear from our guests. So without further ado, let's dive right on into our crypto hot seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show we welcome on guests from throughout the world of cryptocurrencies and derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up on the old hot seat, he's an old friend of the network, but usually you hear him on a different show, not usually in the Crypto Hot Seat. Let's welcome back Mr. Simon Ho, the CEO over there at T3 Index. Mr. Simon, welcome back to the network, and indeed welcome to the Crypto Hot Seat, sir.
Well, thank you very much for having me. It's an honor. What an interesting time to be discussing crypto.
Yes, a lot afoot. We'll get to all of that in the Bitcoin breakdown in a little bit. Before we get there, why don't you give us an update, sir? People are probably used to hearing you, if they listen to the full network, on Volatility Views, talking about all things spikes and S&P 500 volatility. What is it, sir, that brings you to the dark side of crypto?
Well, it's a very good question. I'm glad you asked. So as you mentioned, we focus mainly on the volatility show where we're talking about spikes and whatnot. In this case, I think it's kind of interesting. We have something that's pretty unique to talk about, and that is that we're launching our Bitcoin Volatility Index. It's been in the works for some time. We have made some modification. We've chosen to use a consolidated feed. We incorporate the same price dragging techniques, that proprietary technique we developed for spikes, which makes the index very stable. So we're really very, very pleased with this potential offering. And hopefully people will start to look at it. And ultimately, the goal here, really, the end game is really to try and organize a market in volatility derivatives on Bitcoin itself. So like a spikes or a VIX for Bitcoin. So that's kind of the news.
Now, you and I have touched on this before in the past when this was still just a little bit of a sparkling glimmer in your eye, but it sounds like it's now coming to fruition. So catch up some of our new listeners about what exactly we're talking about here. You're calculating the BITVOL. What are you calculating it on? How are you getting the volatilities? And give us maybe a frame of reference, what numbers you're seeing now versus historically.
Sure. So it's constructed in much the same way that a volatility index is, like the VIX, for example. Now, most people obviously know that one, and it's a measure of the implied volatility on some underlying asset. So with VIX, it's the S&P 500, same with the spikes. When it comes to Bitcoin, however, we are doing it actually on the Bitcoin itself. So as most of your listeners would well know, volatility of Bitcoin exceeds that of equity volatility by a considerable margin. We have on our website, t3index.com, it's free for anybody to use. You can go up there and have a look and see what the latest values are. So the latest value that we have up on the screen is in the order of, the high that we had was actually 172, I think it was. 194, my apologies. Almost broke 200. Whereas at the moment, it's sort of in the 90s. So still very, very high. Obviously, this thing moves around like a banshee. And this is basically what is meant. So this right now is just an untradeable index. It gives people an idea, a barometer of how volatile Bitcoin is relative to its past. But in the future, as I mentioned, we're hoping that this will be actually a tradable product just like VIX.
I know in the past you were pulling a lot of your values from a lot of the OTC markets that the folks at Acuna and others were making. Is that still the case, or have you broadened where you're drawing your data sets from?
Yeah, so Acuna is an excellent partner, and they've got great data. We wanted to take it one step further though and get higher granularity. So it is more of a consolidated feed now, and it's sort of far more rapid. So before we would update the index, either on an hourly or a daily basis, whereas we wanted to go for something that was essentially real time. So that's what we have now, and that's the difference. And I guess that's the reason for reaching out to sort of letting you and your listeners know, because it's been quite difficult for us to source that and taken some time, and we've had to think about it. But yeah, that's the main difference. This is real time. The index itself will be published pretty much 24/7 in line with the underlying Bitcoin market. There will be a few hours of downtime at the end of the week, probably on the Sunday. We haven't quite decided exactly what time, but say 3 or 4 hours for us to just sort of reboot everything. But essentially, it'll be up and running and consistent with the rest of the market probably from next week. And we'll also be posting on the website a full description of how the index is created.
Oh, that'll be interesting, because you're right. It is challenging to put out a volatility index, and then when you're trying to source, OTC liquidity, there may be, shall we say, some gaps in the periods between the trades. I mean, just look at what we do here to analyze the big flow on the week on DERIBIT and things. And there are many times when there aren't large, sizable prints, even on one of those more active platforms like that. So trying to source it all just straight up OTC liquidity probably would be a few gaps, shall we say, when disseminating a quote-unquote real-time index. It sounds like you guys have found some way to smooth that out, which I know for a lot of our hardcore listeners, particularly in the vol space, that's really what they need. That's really what they demand. Right? They want to be able to look at a volatility index and see its ebb and flow really in real time, so they have a sense of what's going on out there. They don't want to wait until the next series of somewhat disparate trades going up before it can really update itself. So that sounds like that's a step in the right direction, Simon, to really getting a lot more of the institutions and indeed a lot of the hardcore bleeding edge on the retail as well to adopting this index. Is that the plan, sir?
Absolutely. What you said is exactly right. I mean, like I said, the Acuna guys had some tremendous data. We just, in order, our goal was always to get this published in full real time. And it was, that's why we sort of had to go a consolidated approach. So we're getting data from pretty much as many places as we can. So yeah, we're very, very pleased with the outcome. The index is nice and smooth and adhering to sort of the properties that we were hoping that would. So yeah, now it's just a matter of sort of getting it socialized and seeing if an exchange wants to actually launch a product on it.
So that's obviously my next question. People love themselves an index or two out there, but they love even more an index that they can actually trade. That's why when I talk about something like, let's say, I don't know, RVX, which is the former VIX of the Russell 2000. It's interesting from an esoteric, purely abstract perspective because that's a number you can trade using, the options on the RUT and things like that, but it's not quite as direct as when there were tradable RVX contracts. So obviously the next iteration of this, Simon, is creating some sort of derivative, a future, maybe an option on this. I know that's still in the works, but if you had to maybe guesstimate, how far away are people from seeing an actual tradable BITVOL contract in the near future?
Right. So that's the $1 million question. We're in discussions with a few different crypto exchanges, so we'll have to see how that goes. We're hopeful. I think this thing has a lot of interest. I mean, there's so much interest in Bitcoin. Lots of people were saying a year ago, 2 years ago, 3 years ago, it was going to be a fad and that it would just peter out. That obviously hasn't been the case at all. We're also seeing it sort of credentialized, if that's a word, with the fact that the CME has brought it online as well in an exchange-regulated space. So, look, I think the future is very bright, and so I think now is the time for us to socialize this, to get people to look at it. This can be instructive in Bitcoin traders' trading patterns. They can look at this and they may not want to trade the vol itself, but they certainly can use that as a tool to help guide them in their own strategies. But I do think that this is eminently productizable, again, another silly word, but, I think that's very true. And given the amount of interest in here, I think it's here to stay. And I think this could be very interesting because it is divergent to the VIX and the spikes, right? So it's not like you'd be just following that blindly. It does move independently. So I think that's what's exciting about it.
Now, it's interesting you bring that up because, the BITVOL itself is somewhat of an independent, crazy beast. But Bitcoin itself, we've had a lot of guests on over the past couple of months, particularly in the height of that madness there, of that sell-off in March, where we had heard for some time, Bitcoin. It was this independent, non-correlated asset from the rest of the marketplace out there. So it was a great choice to diversify some of your, let's say, long equity portfolio into a product like that. Of course, we saw when all the madness unfolded, when correlation tended to go to one across the board, that also held place for Bitcoin as well. We saw massive sell-offs. People were getting to cash however they could, including selling off their Bitcoin. We've had some of our guests term this, and I like this term, the great disappointment that was Bitcoin's performance over that period. And it still is remarkably correlated right now. We're seeing rallies, not today notwithstanding, but we're seeing rallies in the broad index and seeing pretty much rallies in Bitcoin as well. I'm curious, what are your thoughts on Bitcoin's performance, not just from a vol perspective, but from an overall perspective over the course of the last few months? And were you as surprised as many of our guests were that it was as correlated as it was to things like the S&P versus what people were assuming, that it was this somewhat independent entity, Simon?
Yeah, look, that's a valid comment. I think that ultimately, though, when market catastrophes happen, whether it be 2008, 2011 in the Greek crisis, this most recent one, what happens is that you get everybody thinks the same way. Everybody's trying to protect themselves. So it doesn't surprise me at all, really. I think in these extreme circumstances, you typically find a lot of herd behavior going on. And so everybody who is a Bitcoin believer is going to own the coins, but because the stock market's getting pummeled, they want to make sure they protect themselves as well. So I think in anything other than a cataclysmic decline in equity markets, I still think Bitcoin can perform relatively independently. So I don't think there's an issue there. Obviously, when the whole world is suffering from a pandemic and, there's massive job losses, huge toll to GDP coming down the line, everybody's just going to sell whatever assets they have. That's just human nature. And so I don't think it has anything necessarily to do with Bitcoin itself, rather that it's a herd mentality and people just want to protect whatever they can before it goes to zero. So that's kind of the way I look at it. If you look at something that's more mild, even say like maybe the tech wreck of 2000, you probably would find people moving into gold and Bitcoin as opposed to selling out. But that's my take on it.
Yeah, it certainly did exhibit those properties over the last month and a half or so. Look at the chart, and it has pretty much traced that movement in the broad S&P for better and indeed for worse. Since we're talking about that movement, let's keep on diving. Let's go right on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for The Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down just what the heck has been going on in the world's leading digital asset since the last time we got together here on Monday. And the short answer is quite a heck of a lot. Since last Monday's show, we saw a lot of movement. Net coming into showtime right now, we're up nearly 1,200 handles from where we were this time last week. We were at a little bit shy of 7,700 towards the end of the show last week. This week, right now, we're a little bit shy of 8,900 out there by 8,864 and change. Of course, we saw a lot of swings over the course of the past week, leading back into that volatility discussion we were just having. We saw Bitcoin make a couple of attempts to break out north to the upside out there, over 9,000. We saw it hit a couple of times. We hit nearly 9,400 earlier in the week before it retreated off that level. Then it rallied again through 9,000 yesterday. Both times, though, it pretty much failed to keep up with those levels. Right now, again, back down below that 9,000 level at about 8,800 and change. Worth noting, we are indeed approaching that big halving event. We are pretty much a week and change away now, 7 days and 9 hours for all of you keeping track out there. A lot of people have talked about the halving being a driving factor of driving up the price. Of course, we're seeing those rewards for mining being cut in half effectively, so that's going to, of course, impact supply. So people see this usually as a bullish event. Of course, a lot of the near-term sentiment recently of the last 24 to 48 hours has been to the dark side there, to the downside, so a little bit of near-term selling pressure. We'll see if this continues or if the great boat, the great tide that is having pretty much lifts all the boats continuously into the next event. So, Simon, has this been something you guys have been working on over there? Were you trying really to get the BITVOL kind of updated in real time ahead of this halving?
Yeah, I think, well, obviously it's a point of potential volatility because, it's a bit unknown and by definition that increases the level of volatility and the spread of the distribution around the outcomes of that thing. So certainly that's an aspect. We're not from a Bitcoin, Delta One trading background. So I don't really profess to know anything more than your listeners do because they're probably a whole lot more educated about it than me. So I don't have a huge opinion on the halving. I think I think it'll go pretty smoothly. I think, and I'm not sure about the implications of it long run, but. As I said, I'm not really qualified though on that particular topic.
We were talking before about the correlation out there. Interesting data. I think it was Cointelegraph who broke it down. Just putting out, you can do it yourselves, listeners, a simple chart of the S&P 500 over the past few months versus Bitcoin, particularly over the last month and a half or so. You see how that correlation really holds up, perhaps to a disappointing level for a lot of folks out there. It really tracked the S&P straight down and pretty much followed it right back up here over the course of the past couple of weeks out here, which makes it kind of interesting going into this big halving event. Speaking of interesting, let's get into some of the volatility action. We were just talking about the BITVOL index with Mr. Simon. He mentioned it is hovering a little bit north of the 90 level right now, about 90 and a quarter. He also mentioned it hit its recent high back in the madness of mid-March at about 194, almost 194 and a half. So that gives you some frame of reference for where we stand on the Bitcoin front. Now let's look at the realized vol out there. Again, a lot of these metrics coming at you courtesy of our friends over there in SKEW land. SKEW.com is the place to go to kick the tires and light the fires, as they like to say. 30-day realized pretty much unched, which is kind of interesting given the fact that we have had some vol over the course of the past week, but it still is pretty much exactly 72%, which is kind of interesting. 1 year realized also unched around 91%. Not surprised that the 1 year frame of reference wouldn't change that much, but 30 days, lots happened over the course of the past 7 days, yet we're pretty much right still there at about 72%. 30-day implied ticking up, as you might imagine, though perhaps not as much as you might imagine. It was pretty volatile even coming into last week, of course. We were at about a 69% last week, which is well off the highs, but also far more volatile than your typical equity or indeed your index out there. It's up to about a 78% right now. Looking at the volume, we saw some pretty big explosions in volume out there in DERIBIT in particular, but also some other platforms as well. Pretty much some of the most active days they've seen. April 30th was the big day. That, of course, moved along with some of the big run-ups we've seen, and then the give backs out there in Bitcoin price action. The 30th, you saw 175 million worth of notional going up on Deribit. Worth noting also a pretty busy day for OKEX with about 33 million going up worth of notional. So OKEX really solidifying themselves into a firm number 2 out there. The 29th, you saw 153 million worth of notional going up on Deribit, and the same amount, 33 million also on OK Exchange. And on the 1st out there in Deribit, we saw about 89 million out there. Let's see what some of the big prints were out there on Deribit since our last show. And the big one was actually about a week ago on the 27th. Looks like it was a 500 lot of a call spread vertical against puts. We don't have sides for all this, so it's hard to tell exactly what they're doing. But it looks like it's your traditional, maybe bullish risk reversal with calls financed by some puts. In particular, this time it was the June 5,000 puts going up 5,000 times. Excuse me, 500 times. 5,000 would be quite impressive. 500 times against the 500 lot of the 10,000, 12,000 call spread. All this going up on the 27th of April, back when Bitcoin is around $7,700 out there. So interesting. Some folks looking to get some upside exposure financed by puts. Not exactly surprising. It could be the other way. It could be a collar, and with the protective layer to the downside. 5,000 would be a pretty aggressive retreat by June, though. So it probably is leaning the other way. It wouldn't make sense going into the halving exactly what they're looking at for a little bit upside out there. In terms of where the big trades are today, it's pretty much the 10,000 strike, still drawing a lot of the interest out there with nearly 300 contracts going up on Deribit, followed closely by the 11,250s. So maybe some verticals going up out there. Either way, an interesting strike out there. Let's get out to the SKEW. The SKEW's moved down a little bit. It was nearly 10%, which showed a lot of interest in the puts. That interest has, not surprisingly, mitigated somewhat over the course of the past week. It's down to about 5.35% out there in the old 50 delta risk reversal. Let's look at the call to put ratio out there. Also not surprising, that one's going to tick up a little bit over the course of the past week. It was 64%, so right around 2/3 as of last show. This week, up to about 71%. So the calls more firmly in charge. Also seeing a firming up out there on the open interest side, seeing strong OI numbers going into this halving here, even coming off from last show. We're seeing the OI out there in Deribit up to about 673 million. Number 2, we've got 58 million of OKEX. Number 3, Ledger X. So still fighting. Looks like it's losing that fight a little bit with OKEX, but still fighting with it, going into the number 3 spot now with 45 million. And then CME ticking up a bit to about 13 million. We'll get to that in a few minutes. And back to bringing up the rear, there was 71,000. If you're wondering right now, 85% of the open interest is consolidated over there at Deribit. We've got 7% for OKEX, 6% for Ledger X, 2% for CME, and a pretty negligible percentage out there for backed. Same story as last week when it comes to which month most of the people are playing in right now on the option side. It is still June. People like the quarterlies. That just seems to be how the paper flow plays out here in the Bitcoin options, with nearly 39,000, a little over that actually, going up in June. Then the next closest month is May with 14,200. Then we've got, those are expiring, those are the weeklies expiring on the 8th. The end of May, 13,800. And then they fall off again to September with about 11,700. So it seems like most of the action still is out there in the quarterlies. That hasn't changed since Dece, and then March. That's a pattern we've seen repeated time and again. And when one of those quarterlies rolls off, like I just did with March, it rolls right out to the next quarterly, pretty much like clockwork. If you're looking at by strikes as well, looks like it's about the 7,000 and 10,000 in terms of open interest. About 7,500 contracts open on the 7,000 strike and about 7,000 open on the 10,000 strike. So even number strikes, kind of where the action is. Surprising that it's not something a little bit closer to the at the money, around 9,000. 9,000 looks like it's right around 5,000 contracts. So that's interesting that it's still 10,000 and 7,000. That is where the action is. Speaking of the action, we actually saw a little bit of action on CME today in terms of about 4 million worth of notional going up out there today. That's the highest it's been in some time. The rest of the week, their peak was around 1.5 million. So CME has been struggling to get some volume. Did a little bit of digging really quickly before showtime. Couldn't see a lot of paper on the option side except for, it looks like a 5 lot of the May 10,000, 11,500 vertical going. I don't think a 5 lot of a 1,500 point vertical is going to be enough to make that 4 million worth of notional, but we'll have to dig in a little bit maybe after the show, see if something else went up there. That eluded our grasp up there. On the futures front of CME, not the same story. Kind of light overall from a volume perspective. About 4,000 contracts today, 5,600 on Friday. The big day were pretty much Wednesday and Thursday of last week, but both days surprisingly even, about 11,300 on both days. The rest of the week, a lot lower. Heading on out to Bakkt. Speaking of a lot lower, our old friend, the Bakkt volume bot, cranking out their numbers here once again for the monthly futures over there on Bakkt. Remember, this is a 1-to-1 contract versus the much larger 5X coin over there on CME land. They traded about 2,100 contracts in Bakkt land. That's down 38%. From this time last week, and let's see, open interest is at about 9.82 million. That's actually up about 14%. So OI up, volume down, kind of an interesting trend out there. Also interesting, Simon, we're just talking about volatility. I'd like to get your thoughts on this. An interesting piece, I believe this is out of CoinDesk. They're talking about the thought process, obviously for a large core of the audience, particularly for those coming at it more from the technology and the crypto-first mindset rather than from the traditional world of finance who just see this as yet another asset class. For a lot of the folks coming from the crypto-first lens, the crypto space really tends to offer itself as this alternative to the current quote-unquote fiat, monetary system out there. A lot of people thought the recent round of massive sell-offs, pandemic fears, the Fed really diving in with both feet on their quantitative easing front yet again, a lot of that would reveal the weaknesses in all things kind of traditional monetary system and would drive a lot of interest in Bitcoin and other crypto as a result. Yet the folks at CoinDesk kind of crunched the numbers and they found maybe something else perhaps was driving this. Of course, Bitcoin is up. At the time they did this, it was at 8,600, so a little bit lower than where it is now. But still, that puts it up about 21% for the year. At that point, that compared at the time to about a 12% loss in the S&P, even outpacing gold to the upside. Gold's up about 12% out there. So folks thought, who are the true believers, this would be the moment. This would be the inflection point. People would start talking about, hey, this is a great alternative to traditional monetary systems. Yet when CoinDesk started doing the math and actually looking at things like tweets and aggregating tweet sentiment in tweets that mentioned Bitcoin and other things, they found that wasn't it at all. It was really mostly, if not all, driven in terms of the interest. It correlated much more highly with the volatility of the price itself. They found tweets and mentions of Bitcoin really spiking, pun intended, when that huge, now almost 40% sell-off back there in mid-March, that got a lot of people talking about Bitcoin, what's going on, this thing's really volatile, really volatile. And then, of course, as we saw that vol kind of mitigating, those mentions also mitigating as well. It didn't seem like it correlated at all with things like the massive spread of quantitative easing, with the Fed buying junk bonds, all these other things that were going on the stimulus front. Didn't really seem to correlate at all with broad interest in crypto. It really was just straight up price action and indeed volatility. They tried to parse it as well by positive and negative sentiment. That's a little bit harder to do out there. But even that seems to be ticking right along with the price. Even things like the halving, that also seemed to get a lot of interest when significant dates for that. But outside of that, it really was pretty much all the volatility and all the price action. I'm guessing that doesn't surprise you, Simon, because you now have an index in this space, so you're probably counting on something like that. But still, is that a little bit maybe strange that, given all the other macro developments and trends we've seen over the course of the past month and a half, that it still is, at the end of the day, people looking at this like a traditional asset and really getting interested in it when it's moving a lot, as opposed to other macro factors that really are driving people to this, Simon?
Yeah, so that's very, we could spend hours talking about that kind of stuff. I mean, I think, well, first of all, I suppose you mentioned there the take-up of it, and whether or not, this was going to be a seminal moment and people really diving into this. I think you're seeing, well, from my point of view, I've never sort of been a crypto-first guy. I've been very interested in it conceptually, but not really done a whole lot other than, to build this index on it. But it seems to me that the thing that is in its favor is that it hasn't gone away. A lot of people were naysayers. A lot of people felt that this wouldn't ever go anywhere and it was just a Ponzi scheme of some description or something that's not real. That's certainly, I think in the last few weeks you've seen massive declines, yes, in everything. And unfortunately, the beta between Bitcoin and S&P, for example, has sort of approached 1. But that happens pretty much across the board. Unless you have a negatively correlated asset by design, you're going to find that happens at those sorts of times. So that doesn't give me any pause for concern in terms of the future for this thing. I think, a lot of people from the outside who don't trade it think that there are lots of zealots, and there are, we've had some nasty stories along the way with spookiers and stuff like that, people spooking the thing and it's not turning out and people losing money. But ultimately, I actually take the positive from this. The fact that it's still around, the fact that volume is growing. I mean, you mentioned DERIBIT. Some of the volumes there are quite staggering, to be honest. So I think it has a bright future. I think it's dependent somewhat, though, and maybe a lot of the people who are hardcore crypto people wouldn't like to think of it this way, but the more infrastructure that you put in place that looks and feels like the rest of the world, then the more adoption can take place by the broader community. Like I said, maybe some hardcore crypto people don't think that that's a possibility or don't want that to happen, but I think that that's how it's going to be. Now, if and when the SEC, for example, allows for a Bitcoin ETF, for example, I think that that's a game changer, because now you're really being able to offer products that the mom and pop can invest in without having to take all sorts of risk of having to get their own wallet, and we know that there has been some sort of shortcomings with that in the past. So I actually think this isn't a negative at all.
Interesting. I like that. That's why you're putting together a vol index on it. Otherwise, if you thought so, probably it wouldn't be the best move for you. Speaking of, we were just talking about the halving as a driving point for some volume. Just some interesting other nuggets they put together in this analysis here. The most recent halving going back to 2016 out there in Bitcoin. And the volumes back then, when they peaked, right up leading into the halving, which obviously was a big volume driving event, they peaked at about 1.6 billion worth of notional. This year's busiest day, though, by way of comparison, obviously 4 years later, just after the big sell-off in mid-March, saw more than 21.6 billion worth of notional. So that's quite a substantial increase, about 15x over the course of just the most recent halving, which was 4 years ago. So I make this point a lot when we try to analyze volatility in the equity space now versus back in the 2008, 2009 meltdown and crisis, because the volatility markets really are very different than back then. The markets are very different than back then. I think you make a similar analogy to Bitcoin. Even though the most recent halving was only 4 years ago, the market has evolved markedly. There are listed derivatives now versus back then. There's all these other things. There's a BITVOL index now, for God's sakes. We've reached that point. So it's a very different marketplace than when it was just a few years ago. And so interesting factors for those of you. Maybe that's another thing. Maybe that's the other things driving volume versus this lack of faith in the traditional financial system. Maybe that'll be yet another great disappointment for the crypto diehards. I don't know. But either way, we have to keep on rolling. Let's see what's going on in the rest of the crypto marketplace. It is time to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's get to it. Let's break down what's going on in the rest of the crypto marketplace, except for right now, we break down the top 10. That's when we're going to touch a little bit on Bitcoin, because it's kind of inescapable at this point. It still is, of course, the clear number one. Market cap to about 163 billion out there. Remember, take these overall numbers with a bit of a grain of salt, but the rankings are probably pretty reliable. Number two, good old ETH, 22, almost 23 billion. Number three, XRP, 9.6 billion. Number four, Tether, almost 6.5 billion. Number five, Bitcoin Cash, about 4.5 billion. Then they fall off from there. Number six, Bitcoin SV. Number seven, Litecoin. Number eight, Binance Coin. Number nine, EOS. And around out the top 10 here, we've got Tezos, just a little bit shy of 2 billion worth of market cap. Let's talk about ETH first. Lots going on out there. It's up almost 12.5 handles from last show. It was at about a 192.5 coming into the last show. And this week, it's at about almost 205, about 204.90 or so out there. So a lot going up out there. Before I break down the vol and everything else, the SKEW out there in the ETH options, Mr. Simon, I know you're busy just getting this first BITVOL on Bitcoin, obviously, off the ground. But I'm kind of curious. ETH is a clear number two, particularly when you're talking about options and SKEW and volatility and all the things you need to calculate an index. ETH is also a clear number two out there. Have you crunched the numbers at all, even maybe behind the scenes, not for public yet, on an ETH vol index, or maybe whatever you want to call it? Or is that still too far off in the future for you?
No, absolutely not. We have definitely been looking at that and focused on it. I mean, as you mentioned, you go from 163 billion down to 22, so it is a big chasm in terms of liquidity rather in this, and that's the driving factor. So we don't want to creating a volatility index for that. You really need to have some pretty liquid constituents. Otherwise, the index itself, I'm sure you would have seen from some of the smaller vol indices in the past that have been developed, they'll have these gaps, they'll have breaks where they can't compute because there aren't enough options and so on. So yeah, I have a very keen eye on doing an Ethereum version of this. But for now, I want to wait and see how the big daddy Bitcoin version goes first. But certainly, I have an eye to doing that as well, subject to liquidity being sufficient for the index to operate as it should.
Got to get the big daddy rolling first, then the smaller daddy, the mommy index, that is ETH, can come along next. Let's look at some of the numbers out there. Again, these coming at you courtesy of our friends in SKEW.com land. 30-day realized out there in ETH. Again, a smaller sample size, so not surprising. Sometimes it would stay the same week upon week. And we're seeing it pretty much unched yet again, right around 106%. It was 122% not too long ago, so it was more volatile, coming off a little bit, but still frothy, still very volatile out there, which is pretty much to be expected. The 30-day implied, which again, listeners, the implied is the volatility level that is implied, aka priced in, by the options that are trading out there on the ETH land. If you don't not really familiar with the difference between realized and implied, I encourage you to check out some of our programs on the network like Options Bootcamp, Options Playbook Radio, and even the early days of Volatility Views, where we break down a lot of those nuggets in a lot more detail for you. But the 30-day implied right now, it's at about 95%. It's up ever so slightly. It was 91% last week, 95% this week. The ADV looking pretty good, as you might imagine, because we saw some pretty big spikes out here, including a big spike on the 30th to about 11 million worth of notional. That's probably the biggest spike we've seen in some time, at least going back for a little bit. Certainly throughout the entire month of April, that's the biggest spike we got. This chart, for some reason, doesn't include March. I'll have to dig back a little bit earlier, but at the very least, it's the most we've seen for the last month and change out there. April 29th, also a busy day with about 7.3 million worth of notional out there. So busy few days out there in ETH land. Worth noting, the SKEW also coming in. It was 7.9, almost 8% rich, so showed the puts were leading the dance. Now, seeing the calls coming back. The SKEW only 1.6% leaning towards the puts. The OI also ticking up. It was about 40 million last show. This time, 52 million. So more paper flocking out there to ETH land. Let's head on out to Ripple. Another name a lot of you guys like to watch out there. Ripple having a good week north of that 20-cent level, actually closing in, threatening 22 cents right now. Puts it up over 2 cents since our last show. So it seems like a distant memory from back in the old days when it was threatening nearly 10 cents to the downside. So the Ripple bulls, I guess, can breathe a sigh of relief this week. Bitcoin Cash also looking pretty good, up about 8.5 handles almost from last week. And Bitcoin SV up nearly 14 handles from this time last week. Worth noting as well, we're seeing high transaction counts out there in ETH land. It's also contributing to a lot of what's driving this price action and indeed this volume out there, particularly on the options side. Looks like CoinDesk crunching the numbers out here. The total number of confirmed transactions rose to about 845,000 on April 30th. That's the highest level they've seen since July of last year. And the average was 837,000 going into that. So a nice little tick up there in transaction counts over there on the Ethereum network. Probably contributing to a lot of the price action we've seen over there of late. Speaking of things that we're seeing, love to see what you guys have in store for us. Without further ado, let's head on out to answer your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. Let's see what you guys have on the brain. You guys hit us up via all the usual outlets. You can do the social medias at Options on most of the major platforms. You can use our website, the feedback form. You can use the mobile app. You can use, of course, the old-fashioned questions at theoptionsinsider.com. Of course, if you want to get bumped to the top of the list, then you join us for the live show. And then the live questions get bumped to the top of the list, just like this one from ZILLIQA Surfer. Hopefully I'm not butchering that, but he's listening live and he wanted to know, any thoughts on the dangers of trading on DERIBIT as a U.S. citizen? Use a VPN, pick an address, and you can trade. couldn't they lock up my Bitcoin? Yeah, that's one of the reasons why we've said many times here on this show that we're very hesitant to recommend U.S. citizens. And we know a lion's share of you out there listening. We have a strong contingent of overseas as well, but a lion's share of you are headquartered here in the U.S. And so for a U.S. citizen, it's a dicey prospect. You have to, like you mentioned, you have to pick up a VPN. You got to tunnel in to probably Deribit. There are a few others you could use, but they all make it very explicit in their terms of service out there that if they catch you tunneling in from an area where they're not licensed or regulated to trade in, like the U.S., they're going to effectively freeze your account. Will they take your assets? No, but I don't think you really want to be trading a large, sizable position in anything where you have that kind of sort of Damocles hanging over your head, where they could kind of lock you out and freeze you at any time. You can still get access to, I'm assuming, to the liquidate you and give you those assets back, but it might be a bit of a process, and you don't want to have to be beholden to contacting trade support and customer service. How can I get my money back when things are moving and shaking like 39% like they were a few weeks ago out there, which is why we've counseled a lot of you. We talk about Deribit here. We like the volume. We talk about it because it's the number one really options go-to source out there for volume. And we like to see what's trading out there. But we know for a lot of you, it's effectively off limits. And that's a shame. That's why we try to talk about and try to see what's going on with so many of the things that are listed here in the U.S. that you could actually trade, like the options on CME, like the options on Backed. These are regulated entities that you can actually trade. I know some other venues like OKEX and others are trying to make inroads here in the U.S. and trying to make them more accessible to you guys. But, the U.S. regulatory framework still not smiling on those entities out there. So that's why it's somewhat exciting to see $4 million worth of notional going up on the CME contracts today. Unfortunately, it's a 5-lot vertical. That itself is not that exciting. That's why I hate notional. Notional is so misleading. But still, yes, short answer, yes, there are many dangers to doing. We don't recommend you do it for size. And unfortunately, that means that limits you guys to really trading a lot of the spots. And if you want to trade the futures, you can, but they're pretty beefy, particularly the multiplier on CME is a 5X coin. We thought when, Backed was launching their one coin, that would be a little bit more palatable for a lot of retail. The multiplier was smaller. We thought that would be the one. Doesn't have to worry about the issues. It's got the physical settlement. Thought that would be attractive to a lot of people, and it's turned out to be really anything but. That one, I mentioned the OI at the top of the show, is anemic, under 100,000. So it's not really been a player. They have raised a ton of money. They have a lot of assets. They have big infrastructure behind them, like ICE, to really help drive them on the listed product front. They just need to have those products catch on a little bit. But yeah, short answer is yes, ZILLIQA, Surfer, and everyone else out there who has similar questions like that. I am very hesitant to send you guys over through a VPN to start slinging size on Deribit, because you're right, that could be frozen at a moment's notice, and that kind of leaves you holding the bag, sometimes quite literally out there. Next up, Simon, here's one for you. How nice. This comes from Telsey33. She wants to know, please ask Simon Ho if there are any lessons that he learned from creating and launching spikes that he can share with other aspiring products creators. Maybe we can add BITVOL to that list as well there, Simon. They go on to ask, also, can I request an update to the milkshake index that includes class 3 milk from CME? So Telsey, sounds like, Simon, they're fans of your work, A, and then B, he or she, probably she, they want a lot. First off, thoughts on just creating products for other folks who want to dive into those waters. And then B, they want you to update the milkshake to include class 3 milk from CME. So where are we on that, on both of those fronts, sir?
Well, that's fantastic. Thank you, Telsey33. I really appreciate the questions. So in terms of the lessons that I could impart in just a very short, brief moment would be, it's really not easy, obviously, because there are lots of competing products out there. That doesn't mean you shouldn't try, that's for sure. I mean, I do. I get punched in the face most days, but occasionally I get away without getting punched. But essentially, you need to create a product that is differentiated. That's obviously key. There's no point doing something that other people already have liquidity in. And it needs to be somewhat innovative. So with us, we tried to make, the mantra that we have internally is better, tighter, faster, cheaper. We thought, well, if we can do that to our competitor, then that would be something that might be of interest to people. If you pay less for the same kind of thing, if it's more reliable, all those kinds of things come into it. So it's like launching any sort of product. It needs to have appeal to a wide audience. And it needs to be done really well, and ideally with some sort of innovative twists to it, which make it stand out, because at the end of the day, it's very different. It's very, very difficult to dislodge a preeminent player. That's really, really challenging, because people will go, well, why would I go somewhere else? Especially at the beginning when things aren't so liquid. So that's what I would say. Stick to it. Come up, with the best idea you can, and then sort of socialize that with people who are in the know. In terms of the milkshake, so we did this with the New Zealand Futures Exchange. New Zealand is, as you probably know, is one of the world's largest exporter of, in fact, the largest exporter of milk products in the world. So we created a milkshake index for them because they have options over that product. Unfortunately, I haven't had a great deal of luck with the CME. But in general, yeah, I've made overtures to them on a number of different products, but they just don't seem so keen. I think it would be a fantastic idea, even if it's just a barometer. I think that was worth something, actually worth a lot.
Yeah, every time, it seems like every week on TWIFO, when we're doing our movers and shakers for the week, Class 3 milk is somewhere to the upside or to the downside. So it has been extremely volatile, much more options volume getting going out there in the dairy land as well. So I would add my voice to Telsey out there. I'd love to see the milkshake updated to some U.S. listed products here, so we could talk about it. Not that the Anzac region dairy isn't fun as well, but we talk about a lot of these ones here, so obviously that would be near and dear to a lot of our audience out here. Max has a question that's kind of related to what we kind of just talked about earlier. Max wants to know, can we say the halving is driving a lot of the volatility at this point? Well, Simon, we kind of just touched on this earlier, but I guess we could reiterate for Max and maybe folks if they joined us late somehow. What are your thoughts on the halving pretty much driving the vol we're seeing right now in Bitcoin, Simon?
Yeah, so as we discussed earlier, my take is that it's probably more just a function of the overall volatility in all assets, whether you look at oil or stocks or whatever it is. I think it's more a function of that than the halving. As I said, I must say, I'm not a dyed-in-the-wool crypto person, although I'm hoping to be one at some point. Sure. Yeah, I can't really opine on the impact that will have, but I think it's probably more a function of just the generalized volatility as opposed to that.
Yeah, I concur. I think it's causing price action is going to contribute to the vol out there, and we're seeing price action and commensurate volatility action as a result of the halving. It'll be interesting to see what happens after that if the vol comes in markedly. Again, we could look back to 2016, but that's a very different time frame, very different marketplace than it is now. So it's kind of hard to draw direct one-to-one comparisons from that. Speaking of comparisons, ZILLIQA surfers like they're chiming in saying Ledger X is terrible so far, talking about U.S. listed venues to trade. Of course, had them on the show. I encourage you to go listen to the episode a few months back where we had the folks from Ledger X on kind of discussing their offerings. They're trying to make some stuff happen in the Bitcoin volatility realm as well, and they're trying to position themselves as a listed alternative here in the U.S. They're kind of fighting with Bakkt on that physically settled type contract front. They're doing some paper, as you mentioned. They're getting up there with OKEX, kind of fighting back and forth. They're kind of a number 3 right now, so maybe we should devote more time to it. But you're right. Anecdotally, what we've heard from the experience so far hasn't been the best, but maybe as volume grows there, that'll be something we could point to. Certainly, at the very least, you don't have some of the issues that you would have tunneling into something like a Deribit. All right, let's wrap up here with this question from EL4T. They want to know, do you think the big players are spooked by the levels of volatility we're seeing in Bitcoin right now? I don't know about so much right now. I mean, obviously it is volatile. We talked about at the top of the show. It is around a 90-odd% implied vol out there. I think they were spooked by the levels of vol we saw in mid-March. Remember, we saw that nearly 40% annihilation of value just in one session. And that's not something that these, as you put them, the big players, these would be the institutions, and that's not something they're used to seeing in a lot of the traditionally regulated assets. Now, that can happen. Look at what happened to WTI not too long ago. That went negative. So we can see these crazy swings, but traditionally, a lot of the assets they play in are going to have circuit breakers if they're big in the S&P or some other limits that will protect them, insulate them from those big moves, which brought a lot of people to our show and to others asking questions like, hey, do we need circuit breakers in crypto? And a lot of people got very mad that question was being bandied about because it seems to fly in the face of the very founding ethos around things like Bitcoin. But as you put it, the big players, if they're going to be playing for size in these markets, they're going to want something like that. It seems like for now that the shocks are behind us, some of that talk has died down again. But if we do see more systemic shocks like that, EL14 and everyone else who's got this question, I wouldn't be surprised to see more calls from some big players saying, hey, we need to do something. Again, circuit people say that's not part of the nature of crypto, but that's not part of the nature of the big indices either. The S&P 500 is not programmed to stop at a certain level. Those are external brakes put on by the venues upon which they are listed. You could do the same thing for crypto if you so desire. If they all got together, it'd be a challenging prospect. But if you saw some of the big venues, like the Coinbases and others out there all getting together, and Krakens and a bunch of others, and saying, hey, we're going to willingly halt transactions if it moves a certain percent intraday, that's something that could be done by the venues themselves. Again, there's challenges posed by doing it on Bitcoin versus the S&P 500. I mean, obviously, they can halt the underlying assets that make up the S&P 500 as well, a little bit easier than halting Bitcoin. But it is probably a question we're going to see again when we see the vol come racing back again. Simon, you're the Bitcoin volatility guy, so I'll leave the last word with you. Do you think the quote-unquote big players, as EL4T puts it, they were spooked by the levels of vol we're seeing in Bitcoin right now, sir?
No, I don't think so. I mean, people expect this thing to be volatile, and they want to trade it because of that. I'm really surprised that some of your listeners have actually asked that question that you just posed. I mean, it's anathema to the whole point of being in this. You don't want it to be regulated. You don't want it to have levels where the trading stops. Can you imagine? I mean, these are all I mean, not all of them. Some of them are OTC. I don't think all the exchanges are going to adhere to that in the first place. So I can't see how that could possibly come to pass. So I think it's not kind of in the sort of spirit of the people who formed it. Of course, if you want to make this a more legitimate, in inverted commas, product, or more sort of standardized product, maybe. But I think, my cue, I'd take my cues from the FX market. That's an unregulated market. It's open 24/7, and there's no halts in that thing. And that's probably one of the biggest asset classes in the world that trades. So I don't think people should be spooked by it. And if they are, then they're in the wrong market.
There you go. The last word. I like it. Unfortunately, that music means we've come to the end of an epic journey through all things crypto, derivatives, talking the vol, the open interest, the volatility, the indexes on said volatility, and all sorts of fun questions. Keep those questions coming out there. And I love, Simon, your reaction is the reaction a lot of people have when they hear that conversation about all things limits and circuit breakers out there, which is one of the reasons I like to bring it up. I know it gets people's ire out there. But you're right. People do ask this, like EL14 and others. It certainly is a question I don't think we're going to see going away. It's interesting. It kind of shows the intersection of where we are now, with crypto kind of growing up, becoming a more quote-unquote legitimate, big boy, whatever you want to call it, asset class, and people now coming over from those other asset classes and expecting a certain degree of functionality that they had elsewhere that doesn't exist in crypto. And so where that intersection, maybe where that pain point, where that friction is kind of where some of the interesting developments are happening, and we'll see. If we see more systemic shocks, 30-odd% in a day, you might see that question pop up again. Well, Simon, I'm glad you could join us here for the full program. And once again, if folks are intrigued by all things BITVOL or Milkshake or anything else, and they want to kick the tires for themselves, where should they go? What should they do, sir?
You should visit t3index.com. It's got stuff up there, and feel free to contact me directly. The email's on the website.
There you go, t3index.com. You can go there, check out BITVOL and all the other cool stuff they have going over there right now. Spikes, all the other fun stuff. BITVOL still at about 90.25 right now, so it's up nearly 5% of late. So BITVOL moving and shaking. Check it out for yourself. t3index.com is the place to go. And on behalf of Simon and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions, for listening live, all the fun stuff that you do. Keep it coming. And we'll see you back here throughout the rest of the week for all the other shows that we do. We've got recording some boot camp coming up tomorrow, so I have to figure out what the heck we're going to talk about for that. So that'll be live tomorrow, so you can join that in the live party over there. Got 2 of them coming up tomorrow with some great guests there. Then we'll have OPR coming, hitting us on Wednesday. We're going to have, of course, Thursday, we've got Option Block and TWIFO. Friday, Volatility Views. And we're right back here together on Monday for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.